Welcome to Aqua Platicodon, where more useless knowledge gets unlocked. Artificial intelligence is changing the world, or at least that's what we're told. But while some companies are genuinely building the future, others are simply selling the dream. The question is, who's really innovating, and who's just cashing in on the hype? China and the US have taken very different approaches to AI development. Chinese AI companies like Alibaba's Qwen and ByteDance's Goku focus on real-world applications. Their goal is to integrate AI into businesses, optimize logistics, automate services, and make real profits. Meanwhile, in Silicon Valley, AI is often treated as an investment vehicle first and a product second. Success isn't measured by actual AI performance, but by how much funding a startup can secure and how high their stock valuation can climb. In China, AI companies must prove their worth quickly. Investors and regulators demand results. If an AI company promises an advanced model, they have to deliver it or face consequences. That's why Chinese AI development is laser-focused on implementation. Instead of talking about AGI or conscious AI, companies prioritize practical, revenue-generating applications. It's not about storytelling, it's about execution. Meanwhile, in Silicon Valley, things work a little differently. AI startups raise billions based on promises rather than actual deliverables. Many operate on a simple formula: hype, raise, repeat. Think of Theranos, WeWork, and Nikola, companies that promised groundbreaking innovation only to be exposed as smoke and mirrors. Today, some AI startups are following the same playbook. Take Inflection AI, for example. It raised over $1.5 billion promising an AI assistant more advanced than GPT-4. The reality? A chatbot no more powerful than existing AI models. But the founders walked away with millions. And this isn't an isolated case. Many AI startups claim to be working on superintelligent AI, but what they really mean is they're raising money, often without a clear product. So what happens when these AI startups fail? Investors lose their money, and the founders walk away wealthier than ever, ready to start their next revolutionary venture. They don't have to worry about their failed projects. Their bank accounts are full. Their reputations remain intact. The game isn't about building AI, it's about building valuation. And who pays the price? Ordinary investors, workers who lose their jobs when the hype train derails, and ultimately, the credibility of the AI industry itself. To be clear, not all American AI companies follow this hype-driven model. OpenAI and Google, for example, are genuinely pushing the boundaries of AI research. Their breakthroughs in language models, deep learning, and reinforcement learning are real. But as more AI startups prioritize venture capital over real innovation, the line between science and speculation is getting blurred. Meanwhile, China's AI industry continues to focus on applied AI, integrating it directly into businesses and services. The real question is which model will shape the future of AI, the one that builds first and talks later, or the one that talks first and hopes to build later? When technology becomes a financial game, the people funding it are often left behind. AI has the potential to change the world, but only if it's developed by those who are truly committed to building it. That's all for today. See you in the next one.